you for coming down to see us. We appreciate it. We are going to talk to you tonight about your credit. I've been with TLC for over 10 years. I work in the financial education department, and so I'm used to talking in a classroom. This is a little more easy. I won't tell you to raise your hand if you have a question. Feel free to ask questions if you have them as we go. I mean, we've got such a small group. We're going to stick around afterwards, so if you have something specific that you're interested in that you don't really want to talk about in front of the group, then that's fine too. We have business cards. There's a resource table back there. The entire presentation is in your folder along with some other handouts that we'll refer to. I'm going to talk about credit reports, and then I'm going to pass the mic, if you will, over to my colleague Lily. She's also from the financial education department. She's going to talk to you about credit scores, kind of what's a good score, maybe how you can go about increasing your score or establishing a little credit if you don't have credit yet. And we're coming from this side of the room. We also have some of our lenders with us here, and they're going to be able to talk to you about the lending process and what it is that they look at on a credit report and your credit score to kind of see where that falls into the process of getting a loan, a mortgage, a credit card, private loan, something like that. So if that's not what you signed up for, get another sandwich and enjoy. And enjoy. But credit reports. Has everybody looked at their credit report before coming here tonight? Have you recently checked your credit report? No. Okay.
I like the smiles.
So we're going to start, as I said, we're going to be pretty general, and then we'll get a little more specific if you have questions, and then personal afterwards if you would like. Credit reports are basically just an organized list of everything that you have done that's a financial activity, specifically lending. So if you have not participated in any lending activities, you probably do not have a very extensive credit report. There are 3 bureaus, there are more than 3, but there's 3 very large bureaus that we'll be referring to. And lenders are the ones that report information to these bureaus. They're not required to report the information, it's voluntary reporting, but most lenders will report the information because then when they're asking for credit reports, they know they're getting a pretty clear, pretty good, diverse picture of people's credit situation because they're providing information and everybody else is providing information. But we are not required to send anything to these credit bureaus when it comes to a loan. Okay? So this is where we have credit reports may include these items. And the reason why they may include them is because if you haven't given this information to a lender that reports, it's not going to turn up on your credit report. Right? Your credit report doesn't exactly start until you trigger it by engaging in some sort of credit activity. There's information that can be collected when you're 14, when you're 18. You guys over 18? Yeah, over 18. You can, because 18 and under, you can get a copy of your credit report, but you need an adult to sign along with you. And 18 and up, you can request it all on your own. We suggest that you take a good look at your credit reports. Okay, we said there were 3 major bureaus. These are the ones we're going to talk about. I consider them like McDonald's, Wendy's, and Burger King. They all make hamburgers. They all put reports out for you, but they're just a little bit different. They're slightly different in the information they collect and the order that they put it in. And you are able to request a copy of your credit report from each one of these. You can get all 3 of them using this website in the middle, and again, you have this website in your packet. You can request all 3 of them, or you could spread them out throughout the year if you wanted to get one every 4 months. The reason why it's important to look at your credit report is, guess what? A lot of information can get on there that doesn't belong to you. It could be nefarious, or it could just be a mistake, that something got a little confused in the process. But you really want to look at a credit report and make sure all of that information on there is accurate and it belongs to you. Each of the bureaus have a phone number and a process to dispute information. So if you happen to look at your credit report, you leave here maybe tomorrow or whatever, and you take a peek at one of these. If there's information that doesn't belong to you, then you're going to follow their process to remove it. The information on these 3 reports that you get might be slightly different. So I printed my TransUnion before we did our presentation on Tuesday, just because I wanted to see what was on there. Information on my TransUnion credit report was not the same information that was here. It was just slightly different. I have Kohl's credit card, like a store charge card that is here, but I didn't see it there. They don't report to Experian apparently. We do report to TransUnion. So we would recommend that you go to this website here. You can click the box and get all three of them at once, or you could spread them out. If you do not have a lot of credit history, it's going to be a very small, concise document. We have a sample, a very one-page simple sample in there that'll show you kind of the sections. And I'm just going to take a minute to go through each of those sections so you know what might appear in each section, even though they're not in the same order on each of these reports. Does that make sense? So the first section you're going to find is personal information. This is your name, address, date of birth is going to be there, social security number, employer names, driver's license number. These things are going to be there. They get there from whatever you enter when you're applying for a loan. Or if somebody's taking the loan from you, the information that they're putting in, that's what gets sent over to these credit bureaus. So if you use your middle initial on an application, you'll see your name on here with a middle initial. If you've applied for credit before you got married, your maiden name might be on here and your married name might not be if you haven't applied for anything since you got married. Social security number and date of birth are important things to make sure they're correct. That's kind of where other things can end up on your report if those two pieces of information aren't accurate. So take a good look at the personal section and make sure that everything appears to be accurate. You might see that there's data missing. So I've lived at quite a few addresses, but on my TransUnion report, only 3 addresses show up and not my current address. And that's because the applications that when I've applied for a mortgage, when I got a loan for my car, I wasn't living where I'm living now. So when you go to your credit report from that website or from their individual sites, they're going to challenge you to get into your website, into your credit report from their site. So they're going to ask you questions like, which address have you lived in out of these 4 addresses, for example. Because they want to make sure, and you want them to make sure it's really you that's going in to get the information off the report. Unfortunately, we know there's a lot of fraud and things going on these days. So to protect them and yourself, they're going to challenge you. You should know this, right? You should know where you've lived. Well, if you haven't looked at your report in a while and there was some wrong information on there, you might not be able to get into your credit report right away because they might list 4 addresses and you haven't lived at any of them. I use that example because Ms. Lily back there had that happen to her on one of her reports. Someone had used her debit card and bought a TV, and where they shipped it to became an address for her. So when they pulled up the which one have you lived at, when they were trying to confirm that it was her, she didn't live at any of them, so she didn't know what to do. So if you have a problem getting into your credit report, there is a phone number right there. They make it super easy for you to call, and they will help you get into your report, and then they'll also help you dispute whatever the information that was incorrectly reported on there. There's a note down here that even though your date of birth is in this personal information, lenders aren't using your date of birth or any of this protected information when they're making credit decisions. Okay, that is just identifying information for the entire report. So even though your date of birth is on there, it does not come into play when we start talking about credit scores and how they're calculated in the formulas. Of note also on this is your credit report only contains your debt side. There is no income information on here. So if you have a TLC account, that's not going to show up on your credit report. Where you might have an employer name, but salary information, how long you've worked there, that's not information that will appear on your report. Because again, it's getting sent to them by information you've provided. So that's where employer name would get on there. Your account history and information. Now, this has got, and it might be the 2nd section or it could be the 3rd section depending on which report you're looking at. This is like the meat of the accounts that you have open, right? So if you have a like my Kohl's charge, I'll just keep using that. This will show up on there. My account number would be there, that it's a revolving type of credit, that it's an individual account, or if my husband was on it, it would show as a joint account. what my monthly payment is, when I opened it, balance information, line of credit information, how often, how high have I run that up. All of this information is important to the formulas that they use to actually calculate and create your credit score from these reports. When you go into these credit bureaus, you can request your report for free, but you're going to have usually, and I don't think they're running it, that you don't have to pay for it now. There's a fee if you want them to give you your credit score with that. So the free part is getting your report, and right now I think on the other screen we showed you, you can get them more frequently than the once a year, but federal law, they have to give it to you once a year, and then they also have to give it to you if you've made a disputed information. They have to then give you another copy showing you that they've cleared that information off of your credit report. Public record information, this would be if you have any liens, the bankruptcies, when they were filed, court cases, things like that that are reported by the municipalities and other financial institutions that are going to end up on here. These pieces of information will stay on your credit report for a certain period of time, and then they do drop off on their own. There is a little grid on one of the sheets in there. The magic number is pretty much 7. After 7 years, things sort of shift on. 10 years for Chapter 7 bankruptcy. Yeah, Chapter 7 bankruptcy. The Chapter 13 is also 7 years, I believe. There's another section on there that you're going to see on all of them, and it's called inquiries. I was surprised to see how long of a section that was for me when I looked at my report. This is the area that you're going to see who has looked in on your credit report, besides you. Who's collected or requested information about your credit. And so you will see on there the name of the company and the dates. And there is a hard pull versus a soft pull, and we'll talk about that a little bit more, but one of them is going to impact, the hard pull will impact your credit score a little bit. The soft pull is kind of just like a little, I like to say they just kind of peeked at it. The information wasn't pulled in a way that the Bureau now thinks you're actually taking that credit that you've applied for, if that makes sense. So, if you haven't looked at your credit report in a while, but you've looked at it, does anybody have any questions about just the credit report itself? How the information gets there, what to do if it's not correct? You can print it, or you can save it to a file. And again, I just suggest that you go there and look and see what you'll find, because from our experience, we work a lot with college students, and a couple of them recently at Sienna, one at Adrian, didn't know what was on their credit report, and when they pulled it, they saw a lot of things that actually didn't belong to them, and it was a fraud situation. But if you don't look, you don't know the information's there until the first time you go to apply for a loan. So I'm going to pass the little
Clicker bottom.
down arrow.
So down arrow. Your credit score, like Wendy said, all the information is gathered off your report. So make sure that's accurate. I look at mine at least once a year. Make sure because I've had fraud before on mine. Your credit score is simply a number that kind of determines your worthiness to pay back a loan. How good are you at paying back money that you borrow? They will base your score on some different things that will give, each score will be different at each company because they calculate it just a little bit differently. They all use pretty much the same information. Your score is extremely important. Car insurance, I'll look at your credit score. If you have a low credit score, you pay more for your car insurance. When you go to rent an apartment, if you have a low credit score, they don't have to rent you that apartment. Your utilities. If you have a low credit score, they're going to charge you a deposit to turn on your utilities. So your score is really an important thing to make sure you're kind of keeping an eye on it, that you don't have fraud on your report, and try to get that score. Whoops, I hit the wrong one. Down. When they look at that report, 35% of your credit score is based on your payment history. Do you make your payments on time? Make those payments on time. If you miss or late on payments, it could potentially drop your score over 100 points. And if you're trying to get a loan, there's a threshold that you have to be at, and that could knock you out of being able to get that loan by missing payments. So really make sure you're making payments on time. 30% is on how much do you owe on all your loans and your credit cards. What are you allowed to borrow, and how much have you used, and how much do you owe back? 30%. Length of history, how long have you had those loans or those credit cards? The longer you've had a credit card, it's going to increase your credit score. I have one I got an 18 JCPenney's. I haven't used it in 30 years. I don't even have the card. I haven't shopped there, but it's still open for some reason. They haven't closed it on me. That's boosting my credit score because it shows I've had it for over 30 years. Type of credit. Do you have credit cards, retail accounts, loans, mortgages, car insurance? Those are all different types of loans. So they'll look at the different types that you have. And then 10% will be on new credit. If you're applying for a bunch of credit cards all at once, that's going to drop your score because it's going to look like you are trying to maybe move money around or get a credit card to cover another credit card. So you don't want to apply for a bunch of them at one time. On the flip side, if you have a card and you decide I don't use it anymore and you close it, that will negatively affect your credit score. Not a whole lot, but it will drop your credit score because it takes away from your debt ratio, because it takes away that money that you could potentially use, which our loan professionals are going to talk about that. A good credit score is at 670 or up. Your excellent is over 800. If you're down in the 300 to 575, you're probably not going to qualify for loans, but there are various ways that you can work at getting your credit score up. The higher your credit score, the less you're going to pay in interest, obviously, loans, but also on car loans, on your credit cards. Everything will be driven by this number. I put this in here. I love doing this with my high school and college people. This is just kind of to show you how that credit score makes an impact. If you were to buy a car, new car, $30,000, 60-month loan, if you have a high credit score, 720 to 850, you're only going to pay 7.8%. These are not TLC numbers. They're just numbers that we put up there. They probably weren't one time, but they change so frequently. 7.8% interest. Your monthly payment's $605, and when you're all done, you're going to have paid $6,000 plus the $30,000. $6,000 in interest on that car. If you have a bad credit score, 590 to 619, for that exact same car, you're going to pay 18.63% interest, which is over $15,000 in interest on that 30. So that car was now $43,000. Same car that she got for $36,000. That's how much your credit score will affect. It affects your monthly payment, and it affects the overall amount of interest you have to pay. This is a big eye-opener for a lot of our students. There's, I think, a $10,000 difference extra between the two. Basic steps to approve. Credit Karma will give you your score free, and that is the Advantage credit score. It'll be a little bit different, but it'll be close. They're pretty close to the other ones, aren't they? The Advantage, would you say? Within 10?
It depends.
So you can get it from there. Discover offers them free. Any of your credit cards, they'll tell you they'll give you your FICO score free. So that's why you don't pay for it when you do your credit report, because it's all about saving your money, for me. Make your payments on time. That's the first thing to do. If you have credit card debt and you can't pay that credit card off, at least make that minimum payment on time so that it doesn't drop your credit score. Anything that's delinquent, accounts that are delinquent, you want to bring those current so that it gets off your report as a negative. Keep your credit utilization low. Do you know what I mean by that? If you have a $1,000 credit card, you don't want to put more than 20 or 30% of that 1,000 on that card. Because if you do, then it's going to lower your credit score. If you keep it under the 20 or 30, it will help improve your credit score. And Lisa's going to go in on that in depth. You know what you talked about on Tuesday? Yeah, I thought so. So keep those utilizations low. Don't get a bunch of credit cards and max them out, because you'll get in debt, and it's not a fun place to be. You can always get out of debt. It's not the end of the world. You just call us, and we have financial counselors that will help. But it's kind of not a good place to be. So don't max out those credit cards. Space out your new accounts, and pay down your revolving account balances. Try to get those down as low as you can. They say space out your new credit 6 months. When you're doing cars and loans, it's kind of different as you're shopping around, and they're going to address that. I think you guys are next. Yeah, do you guys have any questions on your credit score?
What's considered a revolving account?
Revolving accounts?
It's like your credit cards. So accounts that, so there's installment debt and there's revolving debt. So installment would be like a car loan. If you get like a $15,000 car loan, you just get the $15,000, then you make your monthly payments until the $15,000 is paid off. Or revolving debt is a credit card. So if you have a $10,000 limit and you charge $2,000, but as you pay it off, that balance opens itself back up. So it just continuously revolves, and it doesn't have an ending period unless you stop using the card, and then at some point the company will turn it off. But basically, revolving just means that credit line is always open to you.
Any store credit, Visa, MasterCard, do those.
A line of credit on a mortgage can be a line of credit or revolving.
Yes.
Can you have too many cards?
Can you have, well, it depends on who you ask.
Not
Right.
my husband.
If they have a lot of balances, yes.
Yeah.
It really just depends. It depends. There's a lot of variables that go into your credit.
If you have 4 cards and you've got 10,000, 5,000, 3,000, 2,000 available, that's good. But if you've got them all over that 30%, you've got a bunch of money on each one, then it's not going to be it's going to be a negative effect for you.
But like if you wanted to cancel cards, you wouldn't, you don't necessarily recommend it. But if you did, you would cancel newer cards, not older cards.
Definitely don't cancel the older ones, because that's going increasing your score on your length of history. How long you've had that credit card. It does ding it's not a lot of points when you close it. If it's closed by the company because you don't use it, then it doesn't affect your credit score as much as if you call and close it.
Oh,
Don't know why, it's still closed.
okay.
So, do you guys know what your credit score is? Anyone? No? Haven't looked. I never looked until I started at TLC 11 years ago. I was in special ed for 30 years and never knew anything about all this. And boy, I'd be in a different place if I knew all this stuff. Back when I was young. So I'm going to turn it over to our mortgage and lending, consumer lending.
So like Lily explained, your credit score really deciphers what your APR is going to be on revolving trade lines or installment loans. Also too, what we look at when looking at applications is to say your approval odds are going to be a little bit higher, the better the score you have. Doesn't mean that, if you have a low credit score, doesn't mean an automatic decline. But like Lily said, you're going to be more advantageous to pay a little bit more interest over the course of the loan. Also too, your credit score can also impact how much we are willing to loan you. In addition, your credit score can also impact if you need to put money down, the term you're able to go, and there might be some kind of requirement as far as collateral or how the installment process works. And then if you are applying for a loan with TLC, there's some factors that we look at as far as the application process. Some of them being employment history. Obviously, if you're retired, you're going to be retired. But if you are employed through an employer, we look at how long you've been employed there for, or do you, is it you periodically, switch jobs? We take that into consideration as well. We also look at the types of trade lines that you have on your credit. So like Lisa explained, there's installment loans, which is, autos, mortgages, recreational vehicles, stuff like that, or revolving or unsecured. So revolving credit cards, unsecured via personal loan, line of credit, stuff like that. We also look at your payment history. In addition to any derogatory marks, so collections, bankruptcy, tax liens, we do take that into consideration as well when doing an application. We also look at your debt ratio. So basically, when you provide us with your income, a certain percentage of your monthly payments that you're paying, whether it be credit cards or installment loans, stuff like that, cannot exceed 40% of your income. And then any unsecured debt, which is we combine your credit cards and personal loans, cannot exceed 30% of your total gross. Also too, if you are applying for any form of unsecured credit card or personal loan, we look at of any unsecured debt that you have had, what your highest amount would have been.
Now, when we talked about getting the hard hits and the soft hits on the auto loans,
Yeah.
if you're shopping around, you can go to different auto places and have them, look at cars, see what it's gonna cost. And it's 30 days.
We keep an application open for 30 days.
And when the bureaus are looking at it, they'll see that you are shopping for a car. They're not gonna think you're buying 20 cars because you went to 20 dealerships. They're gonna know that that's like one hit, hard hit, when they're trying to pull your credit for the cars.
But that's different than going to get 6 different credit cards.
True.
A MasterCard, a Visa, a
Because they
American
know
Express,
that
a
you're trying to
Discover.
get 6 different
They
credit
know
Right.
cards.
Yes.
Yes.
Yeah. that
Yes,
is-
so when you go to
homes
the
and
mall at
autos
Christmas time
are
and you wanna open
different.
up all those accounts to say 15%, that will take a hit on your report.
It would be advised if you are car shopping, I would say kind of do your homework first, kind of know what rates are going for, whether, you just call into the credit union and just say, hey, I'm gonna approximately be car shopping, what are the going rates for these days? And, we would, distinguish it to you as low as based on credit approval, collateral value, stuff like that. That way, say you have in the back of your mind what it possibly could be, but you're not giving information out to dealers if you're not necessarily sold on that specific unit. So I always just say, you can always do a pre-approval. You can always submit an application to us. Your pre-approval is good for 30 to 45 days. Then you can shop around, start looking and see what you, want to purchase.
So for mortgages, we look at things a little bit differently. On the personal, you guys just look at one credit run bureau.
We do, TransUnion, yeah.
So on the consumer side, consumer meaning your auto loans, personal loans, installment loans, typically like the shorter term lending, they will look at one bureau. Where on the mortgage side, we're gonna look at all 3 bureaus. We look at all 3 of your credit scores. We take the number in the middle. So if you have a 700, a 720, and an 800, 720 is the score we use. The discrepancy is not usually that big, but it happens because, like they said, sometimes you have a collection that only they may not report to all the bureaus. So, or some kind of derogatory credit. But at any rate, we look at all 3 bureaus. The industry standard is 620 for a credit score, but to be honest with you, that's a bit of a low score in the mortgage world. It's tough to get a loan at 620, even though that is what the guideline says. You're definitely paying a higher rate. The terms unlike consumer loans, your terms might vary too. So the more troubled your credit, you may not be able to extend yourself out. You may have to take a shorter payment term, which makes your payment heavier. But in the mortgage world, our terms are fixed, but your rate is definitely going to be higher. And oftentimes the fees that are charged to you on a mortgage, if you have tougher credit, tend to be heavier. We also look at your debt to income ratio, and that comes from your credit report. So we look at the liabilities that report to your credit report. So it would be, again, student loan debt, installment debt, credit card debt, personal loans, snowmobile loans, motorcycle loans, those kinds of things. We don't look at auto insurance, cell phone bills, car insurance. Those kinds of things do not report to the bureau. And then we want to know if there's any collection judgments or late payments. We're going to look at all of that because the only thing that a lender knows about how you're going to pay your bills in the future is how you've paid your bills in the past. So if you have a past that has a lot of slow pays, as I like to call them, meaning you've got 30-day lates or 60-day lates on your payment, to us, we think that's a relatively good indicator that you're gonna have some slow pays in the future, again, affecting your rates. So that from a credit perspective, that's what we look at on the mortgage side. I don't know if anybody has any questions on that.
Now, I didn't mention about how their credit scores will fluctuate, if you want to. I forgot that.
Between the bureaus or?
Just because of what
Oh,
your
you mean
pay
how it's
period
fluid?
is, yes.
Yeah, so what gets reported to your bureau, like to the credit report, is when your statement cuts. So what that means is sometimes people will come to me and they'll be like, I paid out 2 credit cards yesterday. And I'm like, well, that's probably not gonna be on the credit report that I pulled today, because it's not instant. So what gets reported to the bureau is what cuts on your statement. Statements are typically 30 days. So whatever your statement date is if your statement date is the 15th of the month, then on the 15th of the month, that vendor, if they report to the bureau, is gonna report what your balance is, what your minimum payment is, and then that's what gets reported, you know what I mean? So it's, even though your credit can be fluid, so if you go, it is okay to shop, so if you are looking to buy a car or a house, you can go to different lenders, because the only way you know what a lender can do for you is if they pull your credit. So don't be afraid to let multiple people pull your credit for the bigger purchases, but you do need to do it within a 2 or 3 week time period. But I might pull your credit and tell you that your score is a 730. And if you did in fact pay those credit cards off 2 days before you came to me, and you waited a week and maybe the statement cut, you might go to another lender and you might have a higher credit score from that lender because that credit information got updated between the time I pulled your credit and the time that lender. Is it going to be huge? No. It's, you know what I mean? The margin is typically very, very small. But your credit report's fluid. So as you pay loans off, as things fall off your credit bureau, because maybe the accounts are more than 10 or 7 years old, so they just fall off. I mean, your credit moves all the time. Don't be afraid of that. It doesn't have to stay at one number. It just, as you use a credit card, pay it down, it's gonna flow. But it's not gonna spike. You're not gonna see, it's not gonna go from 680 to 760 to 580. You know what I mean? It's not gonna move like that. It's gonna move just ever so slightly.
Can you explain to them your debt to income ratio?
Yeah, so your debt, I got started on that and then I think I stopped. So your debt to income ratio is your debt, the liabilities on your credit report versus your income. So we take a look at your income and we look at your gross income, meaning what you earn, not what you take home. And we in the mortgage world will let you go up to 43%. So we take your total monthly income, we multiply it by 43%. That's what we're gonna let you spend on all of your debt. So if 43% of your income is $1,500 and you have a car payment of $700 and a credit or student loan of $200, that's $900 and you only have $1,500, that means you can only get a house that's $600 a month. And that's your house payment plus your taxes and your insurance. So that makes it pretty tough. So we wanna see where your income is and how much debt are you carrying. The less debt you have, the more buying power you have for whatever it is you're looking to purchase.
So that's where it makes sense to pay off some of those credit cards though.
That's where it
because
makes
it's going to bring
sense, yes. Yep, and we only look at minimum payments. So sometimes people are like, oh, well, my car payment's $350, but I pay $500 every month. We don't look at what you pay, we only look at what the minimum payment is. So it's the minimum payment on your credit cards, which are typically small, anywhere between $25 and maybe $75 a month. Student loans, that one gets a little tricky, but just depending on where you're at with them. But we take the minimum payments off the credit report and kind of do it compared to what your monthly income is. Anything else? Oh, the clicker. I didn't bring my glasses. Oh, so just here's some additional resources. So these obviously, Wendy already talked about the 3 bureaus and their contact information, but the consumer, the federaltradeCommission.gov or consumerfinance.gov, annual credit report, I'm not sure. Oh, this is
That's
our
ours.
website. Actually, there's some really good calculators on our website. I use them a lot. So, these are just extra resources where you can go just to try, where you can get additional information about, like maybe you've got some medical collections and you don't know what that means for your credit report, or maybe you've got other scenarios. You can get other information about those. So, you can go online to get more information, or you can always reach out to
And we
Wendy
have some
and Lily.
resources on the table too that aren't in your
That you can take
folders.
with you.
There's some other pamphlets back there.
So on behalf of TLC, we say thank you for coming. We're happy to take questions. You can ask them openly, or we can,
We're just gonna
talk to
hang
you
around,
individually.
so.
Yeah,
We'll eat a sandwich.
yeah. Eat a couple, get cookies.
Yes, for sure.